Hello everyone. Risk assets are back in the red, retreating from records, and Bitcoin drops to over 1-month lows as oil is climbing after fresh attacks in the Middle East, which are hurting optimism for a deal to end the war. This is your Midweek Technical Outlook here at xm.com. Now let's get started. Let's start with oil, which is currently bouncing as the renewed hostilities are adding to conflicting signals over peace talks. It is currently bouncing off these 3-week lows near the 90 level and eyeing resistance near the 95.80 level, which is the 38.2% Fibonacci retracement of this recent pullback from the April 7th high to the April 17th low near the 95.80 level. Now to the upside, the key resistance to watch is the 100 psychological mark, where the 20 and 50-day SMA converge, and then further a break above the short-term uptrend line near the 104.44 level, which is a 61.8% Fibo, would mean a resumption of the broader uptrend. Now to the downside, immediate support might come from this one-month low near the April 17th swing low near the 81.78 level. Now the momentum signals are reflecting this consolidation, this pause. They're still holding in negative territory, but easing in momentum, suggesting that this is a pause before the next leg higher. Now let's also have a look at the US100 index. As the Gulf hostilities are heating up, they're taking the steam out of the tech-driven bull run in stock markets, with the US100 retreating from a record above the key 30,000 level, which was an impressive breakout. Meanwhile, investor focus is now shifting to US data on personal consumption expenditure, the key PCE, the Fed's preferred measure of inflation, which is coming out later on Thursday. Now, the index is currently retreating after the record high of 30,306 notched in the previous session, and it's currently seeking support near the 29,654 level, where it was supported in the last few sessions. A further support lies at the 20-day SMA just below near the 29,050 level. And then further below, this is a strong floor that has been holding since early May near the 28,630. And then further below, the 28,340 is the next support, which could potentially cap losses and reduce downside risks, perhaps back toward the 27,000 area. Now the momentum signals are reflecting this pause to the upside. The MACD is still overextended to the upside, but is retreating marginally below the red signal line, and the RSI is flatlining at the overbought threshold, suggesting that there is some fading of this strong bullish conviction that pushed price action to really an impressive record above the 30,000 level. Now let's also have a look at Bitcoin, which is dropping to its lowest level in more than 6 weeks, as jitters over the economic outlook, the war, and persistent outflows from exchange-traded funds are weighing on the largest cryptocurrency. It is currently trading near the 72,000 level and near the lower boundary of this ascending trend channel intact since early February. So this is a key area to watch, as a breakout would accelerate downside and revive a bearish momentum, which is already showing early signs. The momentum signals are both dipping into negative territory. So a break below this area and below all key SMAs would then find seek support near the 71,300 level, followed by the 68,931, which is the 23.6% Fibonacci retracement of this pullback from the mid-January highs to the February 6th low. And then further levels to the downside are the 65,500 level and the 62,500, which is the range floor of this 2-month consolidation throughout February, from February to April. For now, the bearish bias holds for Bitcoin, which has been losing momentum. To revive upside, we really need to clear the 75,000 level and this SMA cluster just below the 79,000 level and 50% Fibo. And most importantly, the largest cryptocurrency needs to clear the 200-day SMA near the 80,000 level. This was an area which was a strong support. Now it's proving a strong resistance. And then further, if it could target the monthly highs near the 82,500, then upside momentum could accelerate. Now that's all for today's market wrap. Thank you for watching.